We're going to change it up a little bit. Do something different here. Hello. Welcome to my channel. Welcome, everyone. Welcome back to another video. My crew. Manny said I got to keep saying that because I already started with it. So you guys are my crew. So we're starting with that, okay? Welcome, everyone, to a new video. Hope everyone is doing okay. Again, whenever you're watching this video, hope you're doing well. Hope you're happy. Hope you're healthy. Hope you're beautiful and sexy. As always, welcome. Today's video, we're going to be talking about where to invest your first bag without money. I think there's a guy on Instagram that does this, so I feel like that's like trademark at that point. Whoever it is, I apologize. If anybody knows, leave it in the comment below who does that. Shout outs to you. He's another investor. Awesome. So get that money featuring that guy, whatever his name is. Tag at the bottom. So today we're going to be talking about where to invest your first bag, okay? Now, contrary to popular belief, and if you watched my last video, which will be right here, because now I can do that, because YouTube life right here, okay? I talked about I don't believe in investing money in education when it comes to books or articles or whatever it is, and I still hold that belief personally. I don't think your first bag should be in education in the form of books. Let me preface that. Now, we're like, oh, Nathaniel, what do you mean your first bag? Hey, everyone's bag is different. Your bag might be big, your bag might be small. I think we're sort of following along the lines that could be taken differently. Your big bag could be like $1,000, $2,000, $3,000, right? That might be what you're willing to invest initially. Your small bag might be like $10, $100, right? Again, it all depends where everyone starts. But I do think your first half of your bag or piece of your bag should be invested in some form of education. Now, I don't want you to go out and look top 10 books to read for financial literacy, top 5 podcasts to listen to, although podcasts are free, so like go listen to a podcast. Go ahead, why not? I think your money could be better spent in simulators. Your money could be better spent on mentors. Your money could be better spent on people that you trust and potentially courses. Little plug. Courses that will help you in the market, right? So a course based where you can spend, let's say $100, $200. Let me tell you something, guys. Just as a quick aside, if a course is over $200, probably not worth the value because most of the information you can find for free. Oh my gosh, did I just say that you can find information for free? Yes, you can. Again, in the previous video, we talked about it. It's just will increase your learning curve. You just have a longer learning curve in that way. So a course and a mentor will kind of help you decrease that learning curve. And I do think you should invest part of your bag in some form of education when it comes to a mentor and or a course, right? Now, you don't have to buy a course. I'm not out here promoting, this person's course or that person's course or my course. No, we are out here just saying education is important and crucial when it comes to actually figuring out the market, figuring out how to invest your money. So now let's broaden this up. Let's not talk about the market. Let's not talk about stocks or options or bonds. We will later, I promise, for those people that love that kind of stuff. Let's talk about just investing in your bag in general, okay? You're a worker, you work for a firm, you're a plumber, you're a construction worker, you're a stay-at-home mom, whatever, wherever your source of income is, right? If you have money that you're willing to put into a savings account, my opinion is put it into something that what we call a safe investment, okay? Now we're getting real serious. The serious eyes are on, the mouth is down, the mustache is not curled, so we're serious here, okay? You can invest your first bag in what we call slow growth. Slow growth investments. What is a slow growth investment? Well, these can be in the forms of real estate. If you do have some, those can be slow growth investments, although real estate has been really bumping like crazy right now. So I definitely wouldn't think even that would be considered a slow growth right now. But another one would be mutual fund. So as a side note, my very first investment 3 years ago, that's a lie, 2.5 years ago, was a mutual fund, right? So I went onto my bank, I logged on and I just said, hey, mutual funds, what is the best mutual fund? Looked at the returns, what percentage increase will I get in 1 month, 2 months, 3 months or whatever. And I said, okay, I have $1,000 I'm willing to play with. Let me put this into a mutual fund. That is an amazing start because what does that mean? A mutual fund, just for those that don't know, it's a pocket. It's a fund that have a lot of different companies, right? So let's just say Apple, Microsoft, Tesla, whatever, right? And every day those companies go up and down, up and down, up and down, right? So when you invest, you put your money into the mutual fund, you're basically taking what they call units, right? So it's almost like shares, but it's like you're taking a little piece of this mutual fund to yourself, right? So if let's say in a day that mutual fund goes up 2%, well, all of a sudden you've just gained 2% on your unit. Most mutual funds are relatively safe investments. If you want to invest in something like a dividend fund or like banks or something, they will give you on average a 2 to 5% return per year. that is what we call a safer investment, right? So you can almost be guaranteed, although nothing is guaranteed, it will be a lot safer to invest in one of these dividends or dividend mutual funds or like blue chip mutual funds, right? Because they're slower growth, they're a lot more progressive. It's definitely something that you're gonna have to keep your money in for long periods of time, 10, 15, 20 years, in order to see a really good return, right? But you're just like, some of you may ask, oh, Nathaniel, but if I put $1,000 and I only get 5% back, that's so little. Yeah, it is little, right? But again, 5% on $1 million is a lot of money in a year. So it all depends on how much capital you're putting in. But again, I think just to kind of dip your toes in the lake or the ocean or wherever you're watching this from, or even the sand, I guess, because some of you are in Midlands and don't have oceans or lakes. It will help you to kind of be like, okay, the market overall was up. My mutual fund went up. Okay, so I'm kind of understanding how this works. I'm sort of seeing how this whole, stock investment kind of game works. So I would definitely say mutual fund, just because it's what I did initially, and it just kind of helped me dip my toes in the lake or the ocean and figure out kind of what I really wanted to do and what I wanted to do going forward, okay? Another thing you can do if you are into stocks, I really won't talk about options and bonds, sorry, just as a complete aside, because I'm not an options trader. I find it kind of boring. Sorry for all these option traders out there. I appreciate you, I love you. Like, comment, subscribe, but you can leave. No, I'm just kidding, don't leave. But you can invest in blue chip stocks. So what are blue chip stocks? Like Johnson & Johnson. Walt Disney is a blue chip, right? For all you Disney fans out there, Disney fans. Those are blue chip stocks, which means they are stocks that their price relatively stays the same. So you don't have to worry about crashes or like Bitcoin, where it goes up thousands of dollars and then down thousands of dollars, right? You don't have to really worry about that, but you gain what's called a dividend, right? So a dividend is basically if a company earns X amount of profit per month, they pay out their shareholders. So if you hold one share, for example, of Disney, they could give you back $10 for just holding their share, being like, thank you for investing in our company. Here's some of the profit to you, right? So it's like, oh, awesome, right? Warren Buffett is a huge person that loves dividends, right? Alex Hardy, shout out, dividends guy. These are slow growth stocks. These are safer investments that you can put your money into, that you can just say, I'm going to put it in, I'm going to watch it and understand what's going on, okay? So I think that would be, if I had to give my opinion, I'm not a financial advisor, so don't kill me if this doesn't work, but my opinion is definitely in a mutual fund or some kind of blue chip slow growth, so you can just start understanding what the heck this market is about, right? For those of you that want a little bit more adrenaline, you're adrenaline junkies, you'll skydive, bungee jump, eat habanero peppers. Some of you are like, habaneros, those aren't hot. They're really hot. They're really spicy. Leave me alone, okay? I love spicy food, but damn, those things are killer, okay? Growth stocks. What is a growth stock? Tesla is one of the biggest growth stocks that you can invest into, right? The reason why they're called growth stocks is because they don't pay out dividends, but that's not the only reason, is because they have a huge market sentiment, right? They are something that moves at an ungodly rate. Like Tesla will move incredibly fast in a day. 5, 10, 15, 20%, or 15, 20, 10% down, right? Whatever it is. So it will move really quickly up and down. These are more for like my swing traders, my day traders, kind of my intraday traders, my individuals that, have a little bit more risk tolerance, really want to learn about day trading, really want to get involved and have the time to get involved. For all you day traders or wannabe day traders, it takes a lot more time, a lot more investment. I know, I'm sorry. But it does have a bigger reward. Easy come, easy go. That's generally what happens with day trading. You could earn a lot of money, a lot of money. You could lose a lot of money, a lot of money. For example, my best week of day trading, no hype, I can show a verified broker statement, Manny, do not laugh, was 10 grand in a week. That was my best week of day trading this year. And it was really good. Well, guess what? The following week I was down 2 grand. So net I was up to 8 grand in 2 weeks, which is awesome. But what I'm saying is that easy come, easy go. With day trading, you can probably earn a lot more than when it comes to longer term investments. But longer term investments tend to be a lot safer, a lot more steady, and you don't really have to think about them or worry about them too often, okay? So those are the 2 areas that you could definitely say that you want to invest your first bag. It's kind of slow growth mutual funds or kind of the big growth stock, faster day trading type idea. But again, I want to preface, the most important place you want to put at least a portion of your bag is in some form of education. I don't care who you go with, what you do, YouTube, Discords, whatever, and don't follow anyone blindly. Don't follow me blindly. Don't follow big names blindly. I don't want to name anyone because, no advertisement here. But don't follow anyone blindly. If somebody's like, oh yeah, Tesla's going to go to the moon. GME is going to go to the moon. Guys, take your profits out. Don't follow anyone blindly. Do your own education. Do your own research. See what's actually happening out there and figure out something for yourself. Because guess what? Let me tell you something. Retail traders, Wall Street investors, Warren Buffett, they're all guessing. Nobody knows what the market is going to do in any which day. You can have a pretty good idea because patterns tend to repeat themselves, right, in history. So you can have a good idea, but to say something is going to go to the moon just because of hype, I mean, the sun could come out blue tomorrow, but do we think it's going to? Because patterns tend to repeat themselves, right? So don't follow anyone blindly. That's another piece of advice. You're welcome. Okay. So my opinion is, if you want to invest your first bag, invest it in a place that you can get your feet wet. You can figure out what's happening in the market. You can kind of understand and start getting involved in understanding investments as a whole, right? Thank you everyone for coming to another video this week. This one is a little bit shorter. It's just kind of where to invest and how to invest your first bag. The next video will be huge. It will be talking about psychology. So it will come probably in the next couple of days. So check out the next video on psychology. It will be huge. After this, we've got probably some pretty big news coming up in the next couple of weeks. So I want to say thank you guys again for the support. Thank you for all those subscribe, for all those liking, for the comments. I love reading all of that. I love seeing all of it, guys. So continue to comment, continue to subscribe, and we'll catch you in the next one. Later.